Power pulling puppet strings of planetary depth. Turning spreadsheets into bayonets. Give OMC like a firing squad threat. Speech so sharp, it cut through the internet. He talk inflation, nation shake foundation. Cash circulation, turn cremation. He engineered panic with a data-driven cadence. Equations racing like demons in the basement. Bank vaults coughing up ghosts of the boom. Wall Street prophets screaming doom. Tickers trembling, options gloom. Liberty lead like a sonic boom. Each Fibonacci flip your Fibonacci fate. Break your trend line, redesign your rate. Each syllable a basic point blade that shred your portfolio parade. He the maestro, mayhem, money machine, messiah. Whisper rate high, can watch funds catch fire. Jerome the tone that trigger the choir. Conquer cry in a fair bill pie. Yo, sentiment swing like a pendulum blade. Charge cascade, dreams decay. Bloomberg fade to grayscale shade. Wiley sip espresso, unafraid. Macro magician with a margin one. He snap his fingers, your gains are gone. Index melt in the marathon dawn. Bears get rich while the bulls respond. Metaphor loaded like treasury bonds. Syntax dense like econ cons. Even reality's rule of thumb. Turn fiscal notes into war drum. Yeah. He a data-driven demon with a doctorate tongue. Pronouncing doom in a quantitative hum. Dollar domino, fall like lungs. Breathing recession and algo's lungs. He reprograms psychology itself. Fear be the product, panic the wealth. Inter-ray incantation stealth. Make bank CEOs doubt their health. Yo, I seen him move digits like Ouija boards. Markets moan like haunted chords. These statements swing like a sword. Cut liquidity like vocal cords. Earnings bleed on a ticker tape. Hope evaporate investors gate. Every decimal a twist of fate. You blink your net with disintegrate. Every press conference like a trial of man. He drop a paragraph, crash your pen. Gold bars glisten, crypto blend. Fiat pulls in a trembling hand. Algorithmic priest stand by the dip, but he flipped the shit with a fingertip. Quant funds fold like poker chips. Sentiment sing Titanic script. The suppress Chris, the pocket blue shit. Speech leak make the system tweak. Every pause got the markets weak. Keep breathing NASDAQ shriek. He got senators sweating in private jets. CBO praying for lower debts. Fed sheets soaked in trader sweat. He ain't even blink yet. Now traders chanting a fever trance. These sticks sound like a dead dance chance. Analysts panicking, PowerPoint stands. He raising an eyebrow, global finance. He got the treasury tied to his one. Currency spawn, money printer on. He talks off, the world respond. Like thunder hit behind a bond. Charge convos like cardiac art. Wall Street pulse and a fragile heart. He snap and he could read the part. Daddy powder and pull it apart. So I log out screens, smoke the grief. Watch the indexes fall like leaves. In the glow weather red I find relief. That bastard profit still cheap.
Oh brother, oh brother, oh brother. Hello, and welcome back to another episode of the Matt Kohrs Show, where I'm Matt, your Kohrs, and together we might just pull off the best show in the world of live day trading, the world's largest casino. Folks, I hope you're having a good one. It is a beautiful Thursday, October the 9th, I want to go with. I hope you are ready for Friday Eve. I hope you're ready for a fun-filled day in the world's largest casino. I hope you made a bunch of money yesterday. I hope you're ready to make a bunch of money today. And more important than that, I hope you've been catching your shrimp on old school RuneScape, and I hope you have been hitting the stair stepper to keep off all of those K-cows. Folks, I hope you're having a very, very good one. I know I am, and I'm pretty excited for today because we are once again, and I know I'm starting to sound like a broken record, but we are once again knocking on the door of an all-time high. And when you are, I did the math last night. I think I have $200,000 in calls, maybe a little bit north. Pretty much a massive percentage, like an unhealthy amount of my personal net worth is currently betting the market will go up. You heard those numbers right. It actually might be $250,000 I have in calls right now. Maybe it's 200K. It's multiple six figures in the market going higher and higher and higher. So I'm liking the fact that we're not necessarily exploding in pre-market right now. but I'm very much enjoying the fact that we are remaining strong. We didn't really give much back. The SPY's technically at a new all-time high right now, while the NASDAQ is hanging out at the all-time high / the closing value from yesterday. So I'm excited where we are. I know many of you might be thinking, but Matt, like, wouldn't you prefer some big gap up just so you see all that green? Well, not really, because as a swing trader, I'm not going to get out at randomly at a market open. And on top of that, I know that the odds of a downside gap fill are extraordinarily high. So there's a good chance whenever that stuff happens that I have to take some heat throughout the day and just wait for the gap to get filled. And sometimes it just gets painful. It can cost quite a bit of emotional capital, if you will. So as much as it's maybe a little bit counterintuitive, I actually really, really like how things are looking right now. And actually, I'm a bit more excited about today than I normally am, because as I'm going to show you in the options map, we have a lot of negative gamma. We have a lot of a slippery surface under us. So that means if the trend and the momentum starts to go in the bullish direction, more so than we've seen in the past couple of days, past couple of weeks, we can really get going in that direction. But obviously, it is a double-edged sword. That means if we start to go the other way, if people start to short, if they start to take profits, if they start to buy puts, if we start to drop, we can really start dropping in that way. So more than normal, I think we're in for better range, more excitement, a little bit more volatility today. So ideally, it's going to be a very, very, very good Thursday, hopefully, if we could identify the trend and get on the right side of the trend. Obviously, I'll be breaking that down. I'll give you the stats, facts, and figures of what you need to know for today. We'll go over all those key levels. Obviously, I know there's going to be a lot of questions, comments, and concerns of what's going on with semiconductors because they ripped yesterday, being led by AMD, which I believe gained, what was it, like 10%, 11%, I want to say, but the whole sphere was looking good. NVIDIA was looking good. AVGO was looking good. Intel, Micron, Qualcomm, all of them. Really the whole sphere, which you could track with SMH. That's the ETF that tracks semiconductors. You might want to put that on your watch list. And if you identify as a real degenerate and you want to trade that whole sector at leverage, you could look at SOXL. SOXL is the 3x leveraged semiconductor ETF. So you might want to be trading that. So, hey, I got, fuck me. Sorry about that. So worthwhile to put on your watch list. So of course, we'll be talking about semiconductors today. We'll be watching semiconductors today. Beyond that, I'm still in SOFI. I'm still in Oracle. I'm still in Tesla. HUT's looking interesting. Coin's looking interesting. CoreWeave's looking interesting. There's a lot of things that are kind of like on deck right now. And if they can get that nice trend, and if we can find that nice risk reward opportunity, I think we might be throwing a little bit more money on the line today because, hey, when the fish are biting, it's time to throw in those lures. I don't know if that's a real saying, so I'd like to trademark that. I'd like to register that. I might be reiterating a line that maybe is buried deep in my subconscious, but if it's not, if I'm the first person to ever say that, if the fish are biting, it's time to throw in the lures, I would like to officially trademark that. But also I literally might just be stealing it for someone else, so I'm not really quite sure. So feel free to fact check me on that one. Feel free to get back to me on if I'm doing that or not. Fed meeting live now. It's not really a Fed meeting. There is a meeting right now. Bessent is talking, the Treasury Secretary. Jerome Powell had a pre-recorded speech, but it is not a Fed meeting. So Chris, just be careful with that. FOMC. What are you talking about, dude? See, this is what I don't like. I don't think you're doing this intentionally, but inherently, Fed meetings, FOMC meetings are massively important to the market, and they're scheduled and everyone knows about them. But right now, like without doing 10 seconds of research, you're starting to say things that are actually literally just wrong, and that could be impacting other traders. So I don't think you're necessarily doing this in a malicious, nefarious reason, but like that would actually be really, really big news. And you're wrong because there is no FOMC meeting today. So you're just kind of popping off about something you don't quite understand, and you're not even doing like 10 seconds of research would tell you that today is not an FOMC meeting day, and yet you didn't even do that. So like I said, like I don't think it was malicious, and if it was malicious, that's fucked up. But like, dude, just do 4 seconds of research. There are other traders paying attention. And you don't want to be negatively impacting someone else. And obviously, it's always okay to like ask a question like, hey, man, is there an FOMC meeting today? To which I and everyone else in chat would tell you no. But instead, you're just like using it as a statement. And that is just not right whatsoever. Like, it's just, dude, just it's okay to ask questions, but to say things as if they're fact and you just don't know what you're talking about, that's obviously where it could get a little bit dangerous. But no, in pre-market trading right now, even this, you're trying to defend it by saying the market's moving. The market has not moved since 4 a.m. We've been going sideways. SPY sideways, Q sideways. We literally have not moved since 4. If anything, there's actually been an abnormal amount of stability in pre-market trading today relative to what we've been seeing over the past couple days. So anyway, off that note, we should probably get into some of the important stuff. S&P 500 futures are little change after benchmark rises to an all-time high. Yes, yesterday, the S&P 500 SPX hit a new all-time high of 6755. Congrats to everyone who played. The NASDAQ also hit an all-time high of 25,142. Congrats to everyone who played. Gold also hit an all-time high and looks like it's about to hit another all-time high today. So once again, congrats to all the gold bugs. And technically, Bitcoin didn't hit an all-time high, but it is very close. So digital gold, not really, I guess, that far behind. The all-time high is just above 126,000. We're currently trading at 123. And this is all happening, it's because the dollar is horrible. Granted, over the past week, the dollar showing a little bit of strength, and that has a bit to do with the government shutdown. It has a bit to do with the recent inflation surveys. It has a bit to do with the election of a new prime minister in Japan. So there's a little bit of reasoning of why we're getting a slight pop here, but overall, the dollar is getting murked as everything else is going up. Futures are going up, equities are going up, commodities are going up. Basically, everyone is trying to store their wealth in something that is just not the dollar. It is going up and up and up. All right, hot news overnight. Israel and Hamas agree to hostage release and step toward peace. Trump moves closer to foreign policy goal of ending a 2-year war in Gaza. So obviously some positive news. In my book, the less global conflicts, the better. Israel says Gaza's ceasefire is now in effect after hostage deal. So seemingly we are making some positive steps forward. And this is good, obviously, just like on a human level, but also on a just global economy level. Remember, markets, economies hate uncertainty. When you have conflict, that is nothing but uncertainty. So removing uncertainty just kind of calms things down. And then more specifically to the U.S., the fact that we're seemingly funding both sides of every conflict ever, I think this is just good for us directly as well, but obviously best for Israel and Hamas to ideally cut down some of this bloodshed. All right.
You wouldn't have even thought of it. They came together. The world has come together around this deal. You know, having the ability to deal with trade, having the ability to use tariffs to help me make a point. The tariffs have brought peace to the world.
I'm very proud.
That was President Trump there speaking to Fox News about the latest Israel-Hamas peace plan, and he earlier touted the deal on his Truth Social account, saying all hostages will be released very soon and Israel will withdraw its troops to an agreed-upon line. Joining us now is Mona Yacoubian, Director and Senior Advisor of the Middle East Program at CSIS. And Mona, thanks very much for making the time for us. I do want to start with the overall scope of the deal, and also to get your insights into how significant of a breakthrough this is.
I mean, it's an extraordinary breakthrough, given 2 years of devastating conflict, trauma in both societies, widespread destruction in Gaza and humanitarian suffering. The deal promises an end to the war, a release of all the hostages, prisoner releases, the flowing in large scale of humanitarian assistance into Gaza. This is a moment that the region, and really I'd say the world, has been waiting for.
Without a doubt.
Mona, David here. So this is phase one. What do you think should be in phase two?
Well, there are elements that are prescribed for phase two. I think what's key, and this is where there could well be snags, is the disarming of Hamas. The plan calls for the demilitarization of Gaza, the destruction of all the military terror infrastructure, so the tunnels, etc. That's going to be an extraordinary lift. No clear indicators of how that is actually to be done. It also calls for phased withdrawal. So the first withdrawal is the one that's initiated in this first phase to an agreed upon line. But then there are subsequent withdrawals, and how and when those withdrawals take place is open to question. And then, of course, the plan, as it's envisioned, appears to have a buffer zone within Gaza in which Israelis would maintain a troop presence. That appears to be counter to how Hamas is describing it, which is that it would be Israel's complete withdrawal from the territory. So big questions remain there on disarming versus withdrawal. And also, are we indeed seeing the final and permanent end to this conflict? Or are there openings for the conflict to resume as differences begin to emerge as to whether or not Hamas is being disarmed?
All right, so here's the real TLDR. We're making some positive, progressive steps to a solution, but obviously understanding just the region and the tensions there, it's never that far away from regressing. So we have some good news. This is obviously positive. Of course, the news could be way worse, but obviously just a generic reminder when you're talking that region in a general sense, it seems like you're just like one singular event from it, like getting back to like full on warfare. So I do have a question for you, and shout out to Steven there for kind of already asking it. Israel and Hamas agree to hostage release and step toward peace. Trump moves closer to foreign policy goal of ending a 2-year war in Gaza. My question to all of you, and yes, we have touched on this a little bit in the past, but I guess I like to point out double standards. It's one of my kinks. It's something I'm into. If this poll is pulled off, does President Trump deserve a Nobel Peace Prize? And I understand that if you're on Rumble, if you're a Trump supporter, a MAGA supporter, you're already just going to say yes. That's going to be your knee-jerk reaction because let's face it, especially a lot of the hardcore MAGA people, you're going to support anything he does and you're going to believe he deserves every single accolade in the book. So that's really not anything new, and it's not something to debate. Maybe you're right, maybe you're wrong, whatever. That's not the point. Really what I'm specifically asking is, to the audience of people who did not vote for Trump, for the audience of people who specifically hate Trump, do you think he deserves a Nobel Peace Prize if he pulls this off? So I'm specifically asking you if you do identify as a person who does not like Trump, if you did not vote for Trump. Basically, I'm trying to ask the non-MAGA people listening right now, if the Israel-Palestine conflict is done, like if it, as of next week, nope, all peace and stability is returned to the region, does the current president of the United States, Mr. Donald J. Trump, does he deserve a Nobel Peace Prize? Does he make him king of the world? I hope it works out, but we'll see. Well, of course, everyone thinks it should work out. Poll. Trump had no hand in this at all. What? I think maybe we live in different universes because he has had more than both of his own hands in this deal. He very much is the person via tariffs and negotiations forcing both sides to the table. No. Well, that's interesting. I'm seeing some people say yes and other people say no, but to the people who say no, once again, like I say, I like to point out hypocritical things. Then why in the world did we ever give Obama a Nobel Peace Prize? I don't even know if they know why he got a Nobel Peace Prize. I would just say, to be logically consistent here, you would either say they both deserve it or neither of them deserve it. So as long as you're logically consistent, that's up to you and maybe your definition of who should get a Nobel Peace Prize and who shouldn't. But based on the precedent that was historically set by the, I guess, organization giving President Obama the Nobel Peace Prize, to which none of us can even name why he got it. Like, truly right now, I don't even know if he understands why he got it. But by the fact that that precedent was set, if this goes through, if Israel and Palestine and the tensions completely just simmer down, peace is restored, awesome, it would be really, really hard without being logically inconsistent to say that President Trump doesn't get it. So I don't know, little food for thought. Feel free to fact check me on it, but I was looking into it a bit last night, and I'm highly, highly confident that I don't believe anyone in the world really understands why President Obama was given it, because generally they don't give out awards for bombing civilians with drones. But hey, I mean, I guess we're now just giving out awards for whatever. Awards for whatever. You can't give the award ever because no one can for sure prove it's over in the future. It would require no one in the future to fight without working crystal ball. No, because it's on a current problem being solved. It has nothing to do with the future. What does that mean? Logical chaos. You might want to fact check your own name. We're talking about the conclusion of a current conflict. Of course, no one knows in the future, but that's a very silly way to do it. That would be a very, very silly way to do it. All right. Anyway, other political things going on globally, but it's more specific to the U.S. We are continuing to see the uptick in the anticipation for how long the government shutdown is going to last. For a little bit there, we were around 15-ish days, and now we are up 10 more days to around 25, according to Kalshi. And looking at Polymarket, the odds of this going past October 15th continues to rise and rise and rise. So at minimum, it does appear as if this shutdown is going to be lasting at minimum for the majority of October. Remember, even though we haven't been in earnings season, we're technically not in earnings season, we are about to get underway. Delta and Pepsi did report, and just because we haven't really talked about earnings in a bit, I just want to let you know what's going on. Delta's profit forecast tops estimates, buoyed by higher fares and resilient luxury demand. I'm not a Delta trader, but I do want to let you know that the entire airline industry is very, very related, as in it's rare for someone to do well while the others do poorly. It's just they all kind of move in lockstep. So one of the easiest trades you could probably do every single earnings season is pay attention to how the first large airliner reports and then basically just extrapolate that forward to the other one. So right here, Delta reported. I'd be more than willing to bet that United, Southwest, and American, the other three, are also going to do well. It's just an industry where they really don't deviate. Not related to airlines at all, but Pepsi also doing well. PepsiCo earnings top estimates as international markets fuel sales growth. And basically, I paid attention a little bit to it, and they said, hey, we believe the lull in beverage demand has basically found its bottom, and it's just up, up, and away from here. So just be on the lookout for that, because we're about to get into another earnings season. I know it's been kind of quiet on that front for a bit, so time to, I guess, get back into that mode of paying attention to the market after it closes and seeing the giant gainers and the giant losers. So I just want to put that on everyone's radar. And of course, don't forget to sign up for the newsletter, because every single Sunday, 10 a.m., you're going to get a breakdown of what just happened in the market, a cheat sheet for when there are earnings. There's a whole nother earnings section here. And then obviously the major macroeconomic events, and then really the seasonality of each individual day, which brings me to today. Today is neutral, leaning bearish. Historically, the Bulls have won this 50% of the time. The Bears have won it 50% of the time. So in terms of who's winning, it's 50-50. However, when the Bears win, they're winning at greater size than the Bulls, which is why you have this downsloping equity curve. But recently, it's been a bit more neutral. So I just want to call that out. I would say it's a neutral to bearish seasonality day. Remember, the government shut down. So if we somehow magically open tomorrow, like if we open today, we will be getting the unemployment report tomorrow, but it is very much a fat maybe. So really all we might be getting is the consumer credit numbers. But right now, since the government is shut down, we're not getting a lot of the basic job numbers. The one thing that did already happen this morning, right here, there is some community banking conference that's going on. Chair Powell had a pre-recorded message, so we could listen to that. But before we do, let's just listen to that very, very quickly.
We're going to begin our conference with welcoming remarks from the Chair of the Federal Reserve, Jerome Powell.
So Powell had a pre-recorded speech this morning.
Good morning, and welcome to the Federal Reserve Board. I'm sorry that I'm traveling today and could not be with you. Thank you to Vice Chair for Supervision, Mickey Bowman, for hosting this conference. Thank you also to all the board staff that made this event possible. Community banks play a vital role in the U.S. financial system because they have strong links to the people and businesses they serve and direct knowledge of local economic conditions. These close ties allow community bankers to better understand their customers and the ensuing products and services for those they serve. I saw this clearly when I led the board's Community and Regional Bank Subcommittee as a governor. I have also seen the critical role of community banks in the communities where I've lived, including as a community bank customer. Today's event is a helpful opportunity for Fed leaders to hear from community bankers and learn more about the issues you face. We're committed to understanding these issues, and we have long been committed to tailoring our supervisory practices as appropriate for community banks to reduce unnecessary burden, while still ensuring that community banks continue to operate in a safe and sound manner. Thank you so much for being here today to share your knowledge and experience, and thanks for being such a vital part of the communities that you serve.
Like I said, pre-recorded message. We just ripped through it on 1.5 speed. It's still actually currently going on. They had the Treasury Secretary there, Besant. He's talking a little bit. Obviously, when he says something, could very well be impactful to the overall market. So you might want to pay attention to it. Besant just got off the stage, so the quote-unquote impact in the short-term market, it's already happened. We already know what he said. So I just want to call that out. Maybe if you don't want to listen to me today, maybe you want to listen to the rest of that. I have a sneaky suspicion that it's going to be boring. All right, bringing it to today specifically. Here are the key levels. As I always do, I mark out the previous high, low, and close. That is the green, the red, and the white line. The white box is the transition zone, and then these yellow lines are going to be your major open interest levels. Right here, you can see that there's a big wall at 6775. There is a node at 6755, and then right here, you have another positive gamma node below us at 6720. When you see these setups, the gamma below and above and below, it's going to be another condor right here. It's a very evident condor, 6775, and it's a big one, 19,000. Remember, they got blown out yesterday, so they're martingaling it, as in they're doubling down. Captain Condor, that group got blown out yesterday, costing them millions of dollars. So now they're coming back today with more than double the size. I believe it was around 6-ish thousand yesterday. You could see today they're up to 19,000. So to the upside, the call credit spread of the Iron Condor, watch 6775 right here. I have it marked out. And then on the bottom side, you're going to watch 6720. Once again, they got blown out yesterday. This is the other one I haven't marked. They're not happy campers at all. Cost them millions of dollars. So now to try to make that back, they've basically tripled the size. So these are going to be very important today. And then as always, feel free to write these down. Feel free to screenshot it. But I can tell you a lot of people are going to be paying attention to that. In the bull case, if we could break above it, I'm watching 6,800. In the bear case, if it breaks below 6,720, I'll be watching 6,700. But I want to let you know that I'm not playing as of now the bearish case at all. Of course, every single day I map out the bull case and the bear case just to have an idea of what people might be doing, what they might not be doing. I want to be best prepared for maybe levels to dip by this, that, the other thing, you understand. But for me, based on the price structure, momentum, options flow, and really the gamma map / structure, I think the bulls are in control, and I'm going to remain bullish until proven otherwise. I was talking a little bit about this in the Discord this morning. Shout out if you want to join the Goonie Trading Discord. The link's in the description of the video, and the first month is free, just so everyone knows. But anyway, a little bit I was talking about the point. My goal here, a lot of people, specifically in chat, are really asking, okay, like, when are you going to get out? Like, what's your top target? I don't have a top target. I'm a trend following trader. As long as we're trending up, I will be in the play. There's no magical level where I'm like, okay, if it hits this, it's time for me to get out. Of course, at major levels, it might be a little worthwhile to scale out. But in general, like, am I just like, nope, this is the level, and if we hit it, I'm taking my money and moving on with my life? No. As a trend following trader, you stay in as long as the trend is intact. As long as we're seeing higher highs and higher lows, as long as momentum is strong, as in prices above all the major EMAs, as long as we have positive gamma beneath us, negative gamma ahead, that would actually be an ideal scenario. Why would I get out of my position? Ride the trend. As a trend following trader, your goal is to get the meat of the move. You're not bottom ticking, you're not top ticking, you're getting the meat of the move. You get it, you move on with your life. You don't know how big the move is going to be, so you just ride it. Every single day, you ask yourself the same questions. What is the current trend? Am I still happy with it? When it starts to break down, by your definition, whether it's a technical trend line, RSI, MACD, whatever it is, when you believe the trend is over, okay, you take your money and you move on with your life. So for me, as many of you guys know, I have a lot of positions, like I said at the start of the show. I think I have about $200,000 in call positions right now. I'm betting on the trend continuing up because the trend is strongly up. When it starts to turn, hopefully it's turning at a point way above where I am right now. Hopefully it doesn't turn today, but it might. And if it does, that means I have to get out. A YouTuber dude says the market makers are all out of the stock market. This is not a bubble. The bull run is completely small investors. No, that doesn't make sense. Literally, our market works on market makers. They're the ones who provide liquidity day in and day out. Whoever is telling you that market makers are out of the stock market, that guy is actually fucking retarded. Like, that is just like the dumbest fucking thing I've ever heard. Per day, somewhere up to 60 to 70% of all transactions are facilitated by market makers. It's not just like a little chunk. It's not just the majority. It is the super majority of transactions that are fulfilled by market makers. It is actually idiotic to say market makers are out of the stock market. That's probably one of the dumbest things I've heard all week, and I've heard a lot of dumb things all week. In fact, I heard people recently talking about how AMC is about to squeeze. This is somehow dumber than that. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. There is a downside gap fill on the SPY to 673.21. This was yesterday's high and the new all-time high as of yesterday. Obviously, we opened above it, so there is a small baby downside gap fill on SPY. And on SPX, once again, it is a small downside gap fill down here to 6755. We are currently at 6761, something like that. We're about 6 points above it. So don't be surprised if we are coming to 5554 right here. Yesterday's closing value, yesterday's high value. It is a very, very popular play. It doesn't hit every single time, but it does hit with a high accuracy, a very, very high accuracy. So just be mindful of it. Remember those stats of the downside gap fill, the stats I know of, are at some point in the next trading session. That doesn't mean at market open. It could come at market open in the first minute, and we see that often. It could also come at the final couple minutes of the day. As much as we talk about the popularity of the downside gap fill, I want to clarify that that does not mean you take it right at market open. Maybe you have other pieces of information that tell you to take it right at market open, and that's totally possible. But I'm saying generically, like when we're just talking about like that particular stat, it has nothing to do with, oh, just do it at 9:30. I will look at the video and send you the link. Okay, man, you could send me the link about the market maker, but that doesn't mean it's right. I can tell you it's not right. I can guarantee you, I can bet any amount of money in the world. You could take my entire net worth and multiply it by 1,000,000. I will go into debt to the Saudi government. I can guarantee you market makers are not out of the stock market. That is such a piss poor understanding of how markets work. Like it's literally impossible. It would be such an incredible seismic shift. One of his examples was Warren Buffett is heavy in cash. Warren Buffett isn't a market maker. What are you talking about, dude? This is actually dangerous if you can't even discern the difference between what is going on right now. Warren Buffett has been in cash for almost a year now. He has like upwards of 300 billion in cash. What does that have to do with what happened yesterday and market makers being out of the stock market? Dude, I think you're conflating things that are very dangerous to conflate, but Warren Buffett is almost the opposite of a market maker. Like, he's a dude who just invests and holds for years, if not decades. Holy shit, dude. First of all, for everyone else listening, Warren Buffett, not a market maker. Second of all, yeah, he has a lot of cash, but he's been in cash for the better part of a year now, maybe in excess of a year now. And to ever think that the market makers are out of the stock market, something cataclysmic would have had to happen for market makers just to be like, you know what? We're no longer in the stock market. That's so fucking dangerous. Basically, don't believe that. So whoever's watching that video, I'll definitively tell you that video is 100% wrong. 100% wrong. Buffett also just bought Occidental. Yeah, that cost him a couple $2 billion. All right, we're kind of waiting for that downside gap fill on the SPY. I would personally prefer that happens very early today, just so we don't have to worry about it later on. I would love it if we could just tap that right now and bounce off of it. The Qs are in the red, unfortunately, for right now. I'm looking for a base. Here's a look at the flow. I do want to, well, hang on. It kind of went positive now. There was quite a bit more negative gamma before this iron condor got thrown on. Remember, generically, iron condors add positive gamma to the system because you are selling the closer to at the money strikes. And when you sell premium, that is putting positive gamma into the system, which remember is a stabilizing factor. But the real watch out of the gate right here is 6775, and really we actually do have a bit of support here at 6755. So we're kind of at a key level right out of the gate here. We have this level. Not only is it yesterday's high, the previous all-time high, it is the downside gap fill, and it is a support level. And then from there, you have yesterday's close at 53.71. So I would love a bounce in here. Of course, it could also bounce in here. I'm basically just watching this 5-point region out of the gate between 55 and 50. I'm hoping that we get a bounce there. I'd prefer we get a bounce because of my plays, obviously. I have a bunch of calls, a bunch of calls. So if it sounds like I'm bullish to the, or biased to the upside, yes. I'm very much biased because that's where my own plays are. But I also think my bias is well supported by the current set of data. Once again, coming back to the simple empirical measures of what is trend, what is momentum, and what is the options flow. 5-minute on the S&P 500 is testing bullish to bearish. So is the 10-minute. 30-minute is bullish. And then we obviously have a bullish setup on the 4-hour here. So a little bit more neutral in the shortest time frame on the S&P 500, while the 30-minute and the 4-hour is bullish. Looking at the Nasdaq, the 5-minute and the 10-minute are bearish. The 30-minute is testing, and the 4-hour is evidently bullish. Clearly bullish over here. So we have a little bit. Is it profit taking? Let's dive in to figure out what's going on. I don't know if it's, yeah. Okay, so the little hit that you're seeing in the Nasdaq over here is definitively profit taking. You can see from 931 to 934, the calls that are expiring tomorrow, that call delta drops. So those calls are being sold. I shouldn't have said definitively. Most likely it's that. We know calls are being sold. So the question is, are they being sold to open or are they being sold to close? Most likely they're going to be sold to close. And we'll know that when the open interest like settles at the end of the day and we get the update in the morning, we'll know which way the net change is. But I could say with at least high accuracy, once again, not definitively, that these are selling to close, not selling to open. But obviously I might be wrong on that one. So a little bit of profit taking in the Mag 7 right at market open. Looking at the S&P 500, pretty much the same thing. You had a small dip in the calls, a small dip in the puts, and it didn't last long. It lasted for a couple minutes. I'm not surprised if people are playing the downside gap fill, which we technically did not get. Look how close that. Oh, that has to piss people off. I am very, very sorry if you are a person in the audience who tried to play that, because it got so close. Look at that gap. It got as close as you can, man. That has to be frustrating. I obviously didn't play it. I'm not the most interested in it because it's fading the overall market move. But with that being said, I do appreciate the math behind it and the statistics behind it. It is a net profitable trading strategy if you have good risk management, but that one is a dagger. You were in it. It was looking good. And you probably are now like, look at that little gap. 55.82 and the gap was to 55.64. That's a tough one. That's a tough one. Honestly, even as a bull, that's kind of frustrating because you could be more confident as a bull after the gap gets filled. You could be like, oh, okay, got it. Like, I don't have to worry about that. So this is kind of crappy for all players involved. The bears who didn't hit their profit target, they got that close. And for the bulls who were waiting to buy the dip on the gap fill, well, that didn't happen either. That's a tough one. SPY, if the SPY got the gap fill, no, the SPY didn't even get it either. The SPY was within, technically it tapped it, actually. Yeah, so the SPY got it because it did hit that equal value. But remember, the SPX is far more important than the SPY. The SPY is an ETF created to track the SPX, while the SPX is the actual index. So SPY is a basket of stocks that is attempting to match the theoretical performance of the actual index. So SPY is a true basket of stocks, as in whoever's running it, S&P Global there, or Standard & Poor's, they have to go out and actually do the buying and the selling and the rebalancing. So it's made to mimic what should be perfectly going on in the index, which is the theoretical benchmark. So this is the actual thing, while SPY, VOO, like there's a bunch of different ETFs created to track what this is theoretically doing. So SPX is the actual thing, while all the others are attempting to be carbon copies of it. Just so you guys know the difference. I'm seeing quite a bit of red. I'm seeing NVIDIA is up. And other than that, I'm seeing a lot of red on my screen right now, and I'm not the most stoked. Oracle, maybe trying to go a little bit green. I did see earlier today that we had a lot of excitement and still a continuation in the world of quantum computing. Right here, Rigetti is up 3.6%, Qubits is up 1.4%, and IONQ is up 1.3%. So I guess another day and another pump in the world of quantum computing. I hate it as an investment. I love it as an active trade. I think as an investment, people just don't understand what quantum computing is. And if you look into the companies, the fundamentals are not strong. And if you ask me, it's a ticking time bomb as an investment. But as an active trade, it is phenomenal. You get big moves to the upside. Most likely you're going to get big moves to the downside. It is a great trade, which obviously please do not conflate a great trade with a great investment. Those are two wildly different things. If you made me put money into these and say, okay, how's it going to be in 10 years? I would not be optimistic. If you wanted me to actively trade it and just get in on these swing points, I mean, the range is so great, you can make a lot of money. So
order submitted.
What the fuck?
Order submitted.
What the fuck? How did the lead account make money and then the other ones didn't?
Order filled.
Well, now they did. But they made $5? Oh, fuck me, dude. Oh, sorry. Right here. So for a second there, these were all red. The lead account locked in 140 and I just copy traded it. And then the rest of them made $5. So, and then this one didn't work at all, apparently. Just not trading. What is going on? Is this copy trader just not on today? 182. Just no. Oh, it actually did trade. It just got in and out at the same value. So even though it says 0 here, a trade was executed that somehow just paid for the commission fee. So it looks like there was no trade, but there actually was a trade. That's confusing. So this trade got in at 87, out at 85-ish, and then all these other ones got in at 85 and then out at barely break even. Dude, the slow nature of which these SIMDA-funded data providers work is going to be the bane of my existence. It really is. It is 100% going to be the bane of my existence. Well, anyway, we got a little crack there, and this is what we've been seeing pretty much every day, is the opening session happens in one direction, and then around 10 to 10:30, we revert it, and then go the opposite way all day. So, of course, today might be some sort of gigantic cataclysmic sell-off, but if I'm just betting on how the recent trends have gone, I bet that we sell here. People are profit taking from the strength overnight, and then we stabilize, and then we bounce. And am I 100% positive? God, no. But this is literally the exact same story that we have been seeing time and time and time again. Time and time and time again. I almost wonder, should I... What time is it? Maybe because like that just sucks that some of them worked and then the others didn't. Okay, what if I just copy 1, 2, 3, 4, 5? All right, what if I independently set them up? I think I have enough time. 33, edit. The speed. The lack of speed is actually what I should say. The horrendous lack of speed. And it's really no surprise because, all right. So I got it for all the take profit accounts. So those are good. So I don't necessarily need this. I'll turn off that copier. But see, the issue is when you're trading 25 accounts, you have to set up the strategy 25 times. And I guess you could do it. I just didn't think the speed would be that off to the point that the lead account locks in 140, the lead account locks in 195. The follower accounts get nothing. The follower accounts get nothing. So it's a trade that worked, should have made money, did make money on the lead account, but then due to the timing of it, just didn't. Just didn't. All right, what I'll do is I'll bring this up so you guys can see what the hell is going on. And I'm going to work as fast as I can. I have a couple minutes to do this. One, I'm going to copy it over 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. All right, let's see how quickly I can apply the strategy independently to each account. Just pardon me for 1 second because I want obviously this up and working before the next trade fires. Oh, it's so slow. They can never make it easy, can they? So I can't complain that much. Obviously, Icarus hit. Has nothing to do with Icarus. That was the problem. Microsoft not going the way I needed to, I don't think. 45, 47, dude. What they should do, and this would be more of a ninja thing, is they should just allow you to mass apply it. Like, hey, all right, just apply to all accounts or something like that. 49, 50. Dude, this is going way slower than I thought I'd be faster here. NVIDIA is still looking decent. Actually, NVIDIA is looking really good. Sorry, I'm just catching it out of my peripherals right now. Perfiderols. 50. Why? Well, lesson learned that I should be doing this, whatever. I guess this is just, I've been trying so much to figure out some of these speed issues. And I just don't know if it's beatable. I think it's just inherently slow. And I don't know if they intentionally slow it down. I think it's just because they have really bad tech. And when I say they, I'm talking about all of the SIMDA-funded industry. I don't think any of these are like tech savants. All right, I think I got it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. We are good. We are good. All right, so here we go. I applied the exact same strategy to all the accounts independently, not copy trading for the rest of the day. Let's see if that helps us out in the slightest with some of these time issues. Let's see if that helps us out in the slightest. All right, we got all that. And if you're just joining in right now, like, what's my big issue is, well, the lead account right here, 41, made $141. The lead account right here, 812, made $195. The follower accounts made nothing. And it was just something about the speed at which it got propagated just kind of fucked it up. So now I just went through and I added the strategy independently to all individual 25 accounts. I guess we're doing a little bit of test in real time just to see if that helps out at all. All right, NVIDIA is ripping. It's really ripping. SOFI is having a bit of a green day. Tesla is getting its face kicked in. Palantir trying to bounce. AVGO down 1%. AMD. Dude, NVIDIA is going. SOFI is going as well. Microsoft, not so much. All right. Not exactly what I want to see. All right, here's a look at the Mag 7 flow. We had that profit taking till 942, 943, 945. First 15 minutes, I wonder if we're double bottoming here and we're going to bounce off of that. S&P 500, same thing. It was looking fine until about 942, and then boom, a bunch of 0 DTE puts were purchased. I can't even say that this was profit taking right here. It is the light blue line. Those are 0 DTE puts. There was just 5 minutes straight of that put buying. Are they right? Are they wrong? I'm hoping that the trend continues of we puke in the morning and then we push for the rest of the day. That hasn't been a trend we've seen every single intraday trading session, but it's been a very, very common one. So I'm hopeful that we do that, but obviously I'm not predicting squat. We're gonna just wait and see. So obviously the S&P 500, we got that green to red move. Let's see if we can now recover. Let's just see if this is a fake out here. They try to push it into the red territory. Can we pop back up? And basically, can we Really, I want to see us take out this 940 high. On SPX, on an intraday basis, I want to see us take out 760. And if you're really short term, you can watch this trend line. Speaking of which, I should get ready for my Vanquish trade. Here's my Vanquish trade. We had a good trade yesterday. I just want to get it primed up because this stuff can move very, very quickly. It can move very, very quickly. All right. I haven't executed it yet. I just want to let you guys know I am looking at the, what was it? The 6760s. I want to buy 10, and I just want to wait for that opportunity to properly do it. I just want to wait for that opportunity. I'm watching this trend line. I'm seeing this recovery. Obviously, you had a stab here at 948. Technically, you had one at 944. That didn't end well. I know we have support here. I'm just wondering if I see enough of bullish enthusiasm, will we get above this? Will we get above it? And what's nice is you have well-defined risk. It's not that far away, a couple points away. So if you're wrong, ideally, you just take the paper cut and you move on with your life. What are we doing? Here's a look at the Mag 7 starting to pop. The SPY did pop and then got hit a little bit more. People were selling calls, but they're not buying these puts anymore. Is this the switch? All right, we're going to rip it. We're going to take a stab at it. I got a fill at 630, so I want out at 780. I'm going to throw that in right now, and we'll see how it plays out. All right, I'm going to move this to my other screen, but I'm long 10, 630. I just put in an order to dump them at 780. And I'm basically saying, is this the reversal right here? Are we going to at least get a pump back up? I'm seeing NVIDIA. I'm seeing the Mag 7 catch a bid. Of course, it can turn on a moment's notice, and that's why I have that downside risk already. Well, actually, I should put in my downside risk. Hang on. All right. What is this low? Well, fuck. Well, that didn't work out how I wanted it to. Did it cut it? Nope, got close though. Got close. What was that? Someone just dumped some size right there on the Mag 7. That was one big block order. And guess what? It was facilitated by market makers because it would be insane to assume that they leave the market. That's crazy, dude. I almost want to see that video just so I can laugh at it. So if you have that link, feel free to share it. I don't know how I didn't get knocked out on that. I got very, very close. I guess because vol stayed high, the premium value stayed high. But circling back to what we were talking about before, someone was saying that he saw a video that the guy was explaining market makers are out of the market and this is just retail. That is just so verifiably false. So incredibly verifiably false, and also logically just doesn't make sense. So I haven't seen this video. I don't necessarily know the user's reasoning, but I can tell you that market makers don't leave the market. they don't leave the market. I'm struggling to find it. I saw it over the weekend. Well, if you can't find it, that's fine, but I'm telling you that video is wrong, and maybe they said it a different way. Maybe they said it in a confusing way where your market makers are bearish. Market makers don't play direction. What are you talking about? The point of a market maker is to make markets. They are not bullish or bearish players. They take the other side of trades and try to make money off the spread. They are not directional players. I don't know where you're like this person, whatever the video is that you watch, literally has no idea about how markets work. This is horrible. This is like comically bad. Market makers are not directional players. When you look at Susquehanna, when you look at Wolverine, when you look at Citadel Securities, they do not play directionally. They are market makers. They make their money off the spread. They hope that people do market orders and they just provide liquidity. They are not there hoping that the market goes up or down. They are literally, they're providing a service, the other side of trades. That's what they do. That is 100% what they do. They like, I don't, and also they don't carry positions like that. Like that's just, it's a grave misunderstanding of how our market functions. Maybe he's misinformed and means big players. Maybe. I wouldn't be surprised if the video doesn't really have much useful information, or maybe things are stated in the wrong way, or maybe there's like the telephone game when some person says something and by the time it goes through other people, the entire sentiment of it gets changed. But big players and hedge funds are wildly different than what market makers are. Those are two completely different entities with two completely different well, their goals are obviously all to make money, but they have two different ways of going about achieving their goal. But no, market makers are not directional players. They did not leave the market, and I just pray other people did not get that same, I guess, breakdown of what's happening. Market makers are delta neutral. They try to be, for sure. That's why we can study certain levels such as these positive and negative gamma ideas and get an idea of how the market will react from it. We're getting an idea of how market makers are actually going to react to hedging out their books.
Order submitted.
Come again? All right. Icarus went short, folks. At a key level. I don't like that. I am not a fan of Icarus going short. What the fuck? Well, maybe Icarus knows something that I don't. Yeah, it went short right on top of this buy-side liquidity, which, to be fair, this bookmap information is not piped into my strategy. I don't even know how I would go about doing that. So as a like the discretionary part of my mind looks at this and says, wow, that's really dangerous. There's a lot of buy-side here, and we could easily bounce off of it. In fact, we could bounce all the way up to here. Not a fan. Look at that. It's just coming in like there's a lot of people buying at 58. This is huge. What the fuck? But to also give Icarus a break, like I said, this data that you're seeing on Bookmap is not, I don't even know how I would pipe it in. And I guess I have some loose concepts of how I'd be able to utilize it. But first, you have to pipe the data in. And obviously, it is extraordinarily dynamic. Holy shit. Yeah, no, that happened at not a good time. Huh. I'm trying to see. Interesting. Yeah, I don't like this trade at all. I'm now seeing a weird edge case that I'm not a fan of. I'm seeing a very, very strange edge case that I could easily write code to protect against and just not allow it to take those trades. But what I'm talking about is the fact that it traded on an outside bar. I could probably best illustrate it here. See how the current bar being formed has a higher high and a lower low than the previous bar? This is an outside bar. It's an engulfing bar. Obviously, this one, depending on where it closes, it would either be considered to be bullish engulfing or bearish engulfing. But I don't like that it traded on an engulfing bar, because on an engulfing bar, that inherently means you're not trending, but you're not trending in the worst way. Sometimes you have inside bars when the high and the low are within the high and the low of the previous bar. So that's a non-trend bar, but it's a non-trend bar and you're not making new range. That's fine, whatever. You're just not trending. This is not trending in the worst sense because you're getting larger range. You're pushing a fresh high, but you're also pushing a fresh low. And those are very fucking dangerous. Out of the 4 setups, higher highs and higher lows, lower highs, lower lows, inside bars, outside bars, I would actually say the outside bar is the worst to deal with because trend in real time on whatever time frame you're talking about is getting more extreme in both directions. So you don't know who's really in control. So I thought I had some code against this. Apparently not. Very much apparently not. I still might get lucky. I'm not saying I'm screwed. I'm just saying I don't like this setup. I would have preferred the short get taken if we take out this low as in a worse fill rather than what happened here, just because I want to play with the trend of the market. Interesting. NVIDIA is still looking great, though. It's actually looking really good. So we're almost back to break even here. I do not like that outside bar. That's a really easy fix, though, fortunately. I swear I had a filter against that. I guess I didn't, or maybe the code I wrote to filter against that was poor. But just to explain in real time, like specifically why I didn't like that breakdown trade. I don't mind the time of the day, actually. On Thursdays, as you're getting into the 10 a.m. hour, whatever way you're trending, there is typically a strong trend. So I don't mind the time of the day, especially on Thursdays. What I do mind is this expansion. We popped at 951 and then dropped hard by 955. Tells me that the market's unsure of which way it wants to go. And when it's unsure, yeah, you might be 50-50 right. You might be on the right side of it. And on this trade, I hope I am. But it's dangerous. You can only do so many 50-50 trades until you just don't pick the right side of the quarter and blow out. So where are we at? Apparently, Icarus wants to fill just below 50, which is unfortunate. Like, look at all. Holy cow, man. Look at this. Look at all that. Ugh, a lot of buy side. Like, there's a lot of people trying to buy at 250. This node right here, this gigantic red node, is people sitting passive buy orders at 25,250. And Icarus doesn't know about this, but Icarus is trying to get a fill at 48, and all of these other people are trying to buy at 50. I don't know, man. I kind of want to override the bot, but I was really this week trying to not interfere with the bot at all. I was really trying to not interfere with the bot, but man, this is like, that's statistically, they dropped it. Hang on. Alert the press. That order just dropped and they moved it down to 35. They just moved it down by 15 points. It was sitting here at sitting buy orders, a lot, 800 of them at 25,250. And then you could see they just shifted it down to 25,235. And it's the same chunk, unless, well, it's a chunk of 800, which I assume is the same trader. But maybe theoretically it could have been a different trader with a chunk of 800 NQ contracts, which is insane. But we're going to find out. You think we're going to see a pop in SPX? Don't waste your time trying to predict that stuff. Trying to predict what we're about to do is an absolute waste of time. Just react to breakouts, breakdowns, fake out breakdowns, watch the key levels, set alerts on your chart, and pay attention to the reaction at key levels and play the reaction accordingly. Don't, like, this idea of trying to guess, do we go up, do we go down? Your odds are literally perfectly 50-50. If you do any form of rudimentary breakdowns of the market, you're rapidly going to understand in any time frame less than the daily chart, it is a perfect 50-50 distribution. It's almost a perfect 50-50 distribution, as in 50% of 1 minute bars are green, 50% of 1 minute bars are red. And the same thing could be said about 3 minute bars, 5 minute bars, 10 minute bars, 15 minute bars, 30 minute bars, 4 hour bars. It is like, it's actually statistically scary how perfectly 50-50 it is. So when you're playing a 50-50 game, Like I'm telling you your odds. It's 50-50. The way where maybe you have an idea of getting beyond 50-50 is to identify levels of where the big guys are established at, because then maybe you get the idea of, okay, I'm expecting large players to react here, so maybe we see a continuation or reversal or whatever it is. But once again, that's why you just mark out the key levels and you say, okay, we found support, it tried to bounce, nope, broke it, didn't hold. We sold off into support, tried to bounce, nope, didn't hold. We vomited it again. The next level of support's down here at 35. I'm watching 35. I'm either watching 35 or I'm watching 50. I'm either waiting for this breakout or I'm waiting for this breakdown. I would say keep it far more simple. But this idea of like, no, we're going to bounce, we're going to break, and that type of prediction, especially for active trading, like day trading, scalp trading, I'm telling you folks, you're wasting your time. You're not going to get ahead. You're not going to be profitable trying to do that. All you do is set up the levels and say, oh, wow, that bounced. I'll take a stab at it. Here's my risk. Maybe it goes. Nope, didn't hit. Okay, I'll watch for this breakout. I'll watch for this breakdown. And you just wait for the price to actually develop. You wait for options flow to actually develop. Speaking of which, we're starting to bounce, but my position is not looking the best. Oh, do I override this? I'm torn. Icarus doesn't know that the Mag 7's picking up here. Icarus doesn't know that the S&P 500 just got a pop. Do I help Icarus or do I just let Icarus fly? I don't know what to do. Icarus, give me a sign, buddy. Give me a sign, buddy. Who said leave it? Unsettled on purpose is saying leave it. Let Icarus fly. SOFI is catching a nice bid. Oracle's catching a nice bid. Override it, Matt, and find out. Fuck around and find out. I'm so torn. Here's what's going to happen is if I don't interact, Icarus is going to take a fat loss. If I do interact, it's going to be the wrong move. So no matter what, I know I'm going to make the wrong move here. I know I'm making the wrong decision. Icarus, buddy. Oracle's taking off. SOFI's looking somewhat decent. Broadcom got back green. Icarus. I don't know. I'm torn. Do I intervene? I'm still wondering if this giant buy order on the bottom of your screen, so it is established at 25,235. I wonder if the market wants to fill that player, this giant buy order. Because if it does, I'm going to get my fill. But that player has been sitting there ever since 10:02, 10:03 this morning. That player was at 250, dropped it to 235. And this isn't just like, this is statistically crazy. That's 800 contracts. All these other nodes are 20, 30, 10, 11. You have to understand the importance of when there's an 800 contract position that's trying to get a fill. 800 contract position. Icarus? Buddy, what are you doing? What are you doing, buddy? What are you doing, buddy? What side are we on? Shorts, jeez. Jeez Louise, folks. This has been a painful one for Icarus. SPY tried to bounce at 10:02. Mag 7 has been trying to bounce since 9:45. It's actually holding on pretty decently. Oracle is taking off. SOFI was taking off a little bit of a hit. NVDA is still nicely in the green. The rest of it is kind of red. Icarus? You coming home, buddy? You coming home, buddy? I'm hoping he didn't fly too close to the sun. I'm hoping Icarus here did not fly too close to the sun. Icarus. What are you doing there, pal? Oh, that's a bounce. Someone has buy orders at 57. Oh no, we just bounced 10 points. Like it was nothing. Rip through it. All right, so this player is still here. 793 contracts trying to get filled at 235. Honestly, probably not the worst idea to join that player. 709. That is size, dude. That is, I mean, when I see 100, it's kind of noteworthy. 800? Look at all these other blocks. 20, 10, 10, 10, 10, 30, 20, whatever. 792. That's crazy. What am I using on Bookmap? I'm using whatever the highest data level is. I'm using whatever the highest data level is. Oracle's still going. SOFI still going. But we are seeing a succession of... is it just going to... I don't know if it's going to break in my favor now. It's so close, yet it's so far away. This has been a painful trade for Icarus. It's been a painful trade. Come on, buddy. Come on, buddy. You know, how perfect would it be? Just give me my fill, and then we rock it from there. Nope. Looks like it's almost rocketing beforehand. Come on, buddy. We got to do our magic rain dance or something. The really sad thing is if it turns from here, if I manually intervene and just take this loss like right now at this level, it's actually super manageable. Obviously, no one likes to take a loss, but it's really about when you do take a loss, which is going to happen quite often, can it be manageable? So I am faced with the decision, do I just take it now, take the manageable loss now and move on with my life? Or do I let it really go against me, and then it becomes, obviously the further it goes against me, the more difficult it is to manage? He might only have one wing. The thing that's keeping me in it, well, first of all, I trust the stats of Icarus, but also I just keep coming back to this player. They haven't not budged at all since like 10:0 whatever 2. They're just sitting there. 235 is the level they're trying to get, and it's 791 contracts. It's dropped by 2 contracts. What does that person know, or what is that person doing that doesn't make the most sense to us right now? I have to admit, I'm not liking the unrealized drawdown at the moment, but the one thing keeping me in that play is the fact that that player is still there. Because that player's there. Maybe they know something, maybe they don't. Maybe they're just trying to establish a nice bottom in the market. It actually could be a play that's uniquely hurting me. I have no idea, but it keeps jumping out to me. It keeps jumping out to me. I'm feeling uneasy. Someone said Trump is speaking soon. Mr. Producer, Mr. Chaos, could you find that link? Maybe we need to listen to that if he's talking either about Israel, Gaza, maybe he's talking about Hamas, maybe he's talking about the economy or a trade deal. But Mr. Producer, if you could potentially find that. Someone is saying that Trump is speaking soon. Oh, basically, I'll be able to get this fill if we just return to the intraday low. We just need to get to like 609, I don't know, 65. We need to overshoot it by like a little bit. A little bit. Oracle's looking good. That's nice. I like that. NVIDIA's still holding. AVGO's in the green. I like that. Tesla's in the red. I do not like that. Microsoft's in the red. I do not like that. There's actually a lot more red than it. Fuck. I'm feeling, I got ants in my pants on this position, folks, because we're just grinding sideways. And I'm just, every single time it goes to the top of this range, I'm getting nervous that it's going to pop against me. Especially when I could get out right now and make it manageable. Oh, Icarus, the stress you add to my life. He's talking about Epstein, actually? Well, I kind of would love to be out of this position before he gets talking, because you never know what the dude's going to say. SPY showing a little bit of weakness. Mag 7 is going flat, no real trend. S&P 500 try to pop a little bit after a clear downtrend, kind of going flat. So it's all a little bit indecisive. We do have support down here at 6720, and we have resistance up here at 6775. Remember, this is the Captain Condor, who did in fact get blown out yesterday. Icarus, buddy? Icarus, buddy? Come for me. Come for 4850. Save me. Save the cheerleader, save the world. Nope. Ripping right against me now. Shit. What a bad fucking fill. Fuck me, dude. We just bounced from 58 to 74 like it was nothing. Welcome to the world of negative gamma. We are ripping through levels like it is nothing. Why do I get that sneaky suspicion that no matter how this ends, I'm going to feel pretty stupid? I just have a real sneaky suspicion about this one, folks, that no matter how it ends, I'm going to feel pretty fucking dumb. Icarus? Buddy? Buddy, old pal? I'm really trying to do my best to not intervene with robots. I'm trying to let the robot be a robot. Let him be his best robot self. I'm trying to not get in the way. Trust the I'm doing my best. It's taking an extreme amount of self-control and discipline for me to not intervene. Every single time it's dipping into the 50s, I keep thinking, dude, you could take a small loss and like live to fight another day here. It's taking an extreme amount. That player is still there. 792 contracts at 25,235. Still there, has not gone, and it's been there since 10:02. That sitting order. Been there. Kick the robot. I'm trying to be nice to the robot. I don't want the robot to rise against me. I don't want the robot to rise against me. All right. I shout out to the producer. Okay, so this is at 11. Oh, someone said he's speaking soon. It doesn't look like he's speaking soon. And generally, when they have a time, it's almost like an hour after that. So maybe the cabinet meeting's at 11. I don't know. We have the link, and the audio will pop off if he starts talking. But I thought it would actually be soon because someone said it was soon. Dude, we're just watching paint dry here. Fuck. Damn, every time it starts to look like it might be going my way, it just bounces up. And then every time it bounces up, it's just getting smacked. So I guess I can't complain that much, but this has been way too long of a trade. Uh-oh. Was my gut feeling right? Should I have intervened? Dude, my spidey senses have been popping off on this one. Look at that. We've done a bunch of nothing. A whole heck of a lot of nothing. They dropped to 210? No, did they? They did. You are 100% correct. Yeah, they dropped this order, the 800, down from, it went from 250 to 235. Now it's at 210. Golly, what are they doing? What the hell are they seeing? I don't even want it to go that far. I just want to get this fill. Oh, the next time that Icarus can trade is actually at 10:30, an hour into the day, if this position is closed out. If this position isn't closed out, obviously it's not going to take a whole new one. But this trade's been taking years off my life, folks. Come on. At least, why can it at least make me feel better? And like it's doing this dance around thing. Why can't it just dance around at my fill value where I'm like, oh, a little red, a little green? Like, why is it dancing around when I'm like deeply in the red? That's all I ask. If you're doing this, hey, a little up, a little down, a little up, a little down, like why can't it just do it where I'm like, okay, I'm a little red, I'm a little green, like nothing that crazy. I don't know. How many points do you usually go for? I don't do it like that. I think that's actually a really bad way to trade. I think it should be based on volatility, something like ATR. If you're always going for the same set of points, 10 points on certain days is way different than 10 points on other days. Sometimes vol expands, it contracts, it changes on the time of the day. I think, I know that there's a lot of people who have set profit targets, like rigid by point definition, same thing with risk. And I think that's a horrible way to do it because that's basically assuming volatility is always the same. I don't. Icarus!
Target
Icarus!
filled.
Finally. Well, that felt like a lot of stress for $300. A lot of stress for $300. But anyway, hey, a win's a win. But no, the way my stuff works is it's based on ATR, which is effectively a measure of volatility. So as volatility expands, it'll have larger targets and also larger risk. But as it contracts, same thing. The target and the risk will be smaller, which I mean, I'm sure there are strategies out there that have set profit targets that work, but I find life is way easier if it somehow matches like what's going on with volatility. NVIDIA is still looking good. Oracle's looking good. AVGO was looking good. AMD is picking. So semiconductors are still looking good. Palantir's getting hit. Tesla's trying to recover. Microsoft was trying to recover. Apple's not looking so good. Hood's doing nothing. So where is all this bearishness coming from? Energy is getting cooked. Financials are getting cooked. Utilities are getting cooked. Industrials are getting cooked. Healthcare is getting cooked. Real estate did get cooked. Now it's going flat. Consumer discretionary got hit, going flat. Consumer staples got hit, trying to bounce back. So energy and financials and healthcare look real bad right now on an intraday basis. From market open till now, healthcare, energy, and financials are not looking so good. And I'm sure we could see that in the heat map. Yeah, so tech is showing a little bit of life. Oracle, NVIDIA, the intraday trend, semiconductors are looking good. But right here, the intraday trend for financials, for healthcare, and then also for really energy. So pretty much the bottom here of your screen, which once again, this is just the heat map for the S&P 500. It's everything in the bottom that's causing an issue. Actually, industrials are pretty bad too, but financials, healthcare, energy, industrials. So kind of like an inverted L almost, pretty weak on an intraday basis. At the moment, obviously things change like that. Dude, did I bottom ticket? Dude. Did the market gods hear Icarus's cry? Did I bottom tick my exit? Are we gonna pop from here? Am I finally the guy who's on the right side of getting ticked out? Generally, I'm always the guy complaining like, fuck, I got ticked out, then it ripped, or I got ticked out and blah, blah, blah. Like, is getting wicked out finally gonna benefit me for once? Is this my day? Is this the day of my daughter's wedding that Icarus got the exit right before it would have gotten completely harpooned? We're gonna find out, folks. Oracle is still looking good. Look at Oracle, a nice fake out breakdown. We're breaking the high of the last 3 days. Upside gap fill is 300. Key technical level, psychological level, open interest level, 300 if you're watching Oracle. SOFI, I just don't want it to break down. Would love it to break. Yesterday was an inside day, no real trend. AMD, strong, new all-time high. AVGO, I'm waiting for the break of 347.61. Palantir, still inside this range from Friday of last week. Tesla, lower highs. Inside day thus far, not the biggest fan of the current setup. Microsoft is kind of fucking me a little bit. Apple just caught in this range still. Hood, range bound after an all-time high. CoreWeave, range bound. Coinbase, range bound, but a higher low. Looks like it's pretty hungry, looking bullish. Hut, same thing. Oklo, same thing. Netflix, bouncing back. Meta, doing nothing at the moment. Netflix open, range bound, looking like it put in a lower high. Rigetti, strong. Qubits, consolidating after hitting a high. IONQ, same thing, consolidating. MSTR looks like shit right now. VIX is a little elevated. ETH is at 4.3. Bitcoin is taking a bit of a hit as well. 5-minute, 10-minute, 30-minute momentum is all bearish on the S&P 500. 5-minute, 10-minute, 30-minute momentum on the Nasdaq is also bearish. All right, let's set up some reversal alerts. That's not so good. Short term, things are getting a bit hit. We do have individual names looking pretty decent. Individual names. Overall market, because of energy, financials, healthcare, and a little bit of industrials, is really getting clapped right now. Not necessarily tech. Tech is technically red, but it's holding on. Small cap. Oh, dude, that's getting hit. Yeah, big players are selling the New York Stock Exchange slightly. They actually sold it worse yesterday. This isn't at the level of bad where I'm like, uh-oh, is this over? I don't think it's that at all. In fact, we're not even at yesterday's low, no less the low from like a couple trading days. Really, we're just at the bottom of the transition zone. And we also have this support at 20. So we're trading at 37. 35 is going to be a little bit of transitional support. You have the put credit spread support on the Condor at 20 here. So I get that we're trending down, but we're also trending down 2 levels of support. And even if that snaps, there's monster support at 6,700. So on an intraday basis, I understand that would be painful. But from a swing trading perspective, from a daily chart perspective, we literally hit an all-time high today. How can things be bearish when we hit an all-time high? Sean, stop commenting KTOS. Jesus Christ. Well, now you just got deleted because you don't understand that in a civilized world, we don't randomly fucking just spam. No one likes spamming. And yet, what? They think that's a way to get people on the internet to do what they want? Come on, just be an adult. Spamming and spamming and spamming. Jesus. We trade differently, but I wanted to apply your ATR logic the way I trade. How would that be? On any given day, I go for 10-point trade, but on other days, I should go for 5 points or 20 points. Your target should scale with volatility. So if things are more volatile, you should have a higher target and a higher risk. If things are less volatile, you should have a lower target and a lower risk. So there are many ways to scale it with volatility, but I think the easiest thing would be look at the ATR. So let's say, I don't know what time frame you're really trading on, but let's say you're looking at, I don't know, the 1 minute, the 3 minute, the 5 minute, the 10-minute ATR. And as that goes up, you have higher target and risk. As that goes down, you have a lower target and risk. So it could be a multiple of the ATR. But like I said, if you're just always going for 10 points per day of the week, per week of the year, per whatever's going on, 10 points is wildly different. 10 points at noon is very different than 10 points at market open, which is very different than 10 points at 2 p.m. So I feel like you're kind of kneecapping yourself to always go for 10 points. It just doesn't make sense to me. because vol it just like, and even that, certain days 10 points at noon might be a lot, it might be a little on other days based on vol, even though it's the same time of the day. So I think you just need some measure of volatility, and one of the easiest ones to use is ATR, but there are other ones as well, just so you know, and a quick Google search or talk to ChatGPT, and maybe you could find one that is specifically good for you in your trading system. I'm just letting you know what I use. So I'll look at the ATR of whatever time frame I care about. It might be the 30 minute, the 10 minute, it might be a tick chart, it might be the 1 minute. I don't know. Depends on the strategy. But my point is that it scales in both directions based on vol. Oracle's looking great. NVIDIA's giving some back, and we are hitting some lows. When do you cut losses on options? When I think the trend has changed. If the trend hasn't changed, I'm not getting out. But that part right there comes back to picking the proper option, as in proper sizing, proper expiration date, and the proper strike. Is sometimes you have your options blow up in your face and the trend hasn't even reverted. And I find that's people going too far out of the money, and it's people going too close to expiration. You have to give yourself time. And I think a really good rule of thumb, this isn't necessarily going to work for everyone, but I think it's going to work for a lot of new traders. Whatever time you think you need on an options contract, you could probably start in the world by doubling it. If you think you need a day, you should probably go to the end of the week. If you think you need a week, you should probably go 2 weeks. If you think you need 2 weeks, you should probably go a month out. You should, like, especially for new traders, I think that is a very helpful tip. Once again, it's not going to work for everyone. Maybe you're already really good at picking the proper expiration date. But one of the things that I see plaguing the retail options trading community is picking expiration dates that are way too close in time. Way too close in time. So I think one thing you could do to help yourself, just a decent rule of thumb, is doubling the time. And you should probably also be sizing down. A lot of people trade, and hey, I'm guilty of this myself. A lot of people trade in the sense of, like, that is apparently the trade that they need to, like, pay off all their bills on, and they just, like, swing too hard. And that's just not having enough respect for the fact that the market is pretty much 50-50. And so if you're just saying, nope, this is the trade that has to work for me, there's a very, very good chance that you're going to be on the wrong side of the coin flip. And even if you're on the right side, you might not be in the proper emotional state due to the swings in the account to handle it exactly how you should. Matt, how do you think about trading VWAP only? I think that's fucking stupid. I think trading on any individual indicator, like you're like, nope, this is the only thing I use. I think that's really, really dumb. Really dumb. I've never ever heard of or studied or done an analysis of an indicator that couldn't be made better by using a different indicator, a non-correlated indicator, as a filter mechanism. Like, there's no singular indicator in this world that is good enough to be used by, like, its own. Ever. And if that existed, you realize that the edge would already be gone, because people like myself and people way more influential, powerful, and smarter than me would have made all of these systems to trade off that one indicator, and then it's gone because everyone else is already trading it. So it doesn't exist. Logically, it doesn't exist. Empirically, it doesn't exist. And also anecdotally, I've never met a single indicator that was great out of the box by itself. I've always been able to improve it. A lot of them just by themselves aren't even profitable. They represent the 50-50 nature of the market. You can pretty much, like I said, in my own experience, there's not a single indicator I've ever used or come across that hasn't been improved by using the filtering mechanism of a different indicator. Can I check NVIDIA options flow? Yeah, sure. Whoa, Mag 7 just got clipped pretty hard there. It's flat. AMD popped, giving it back. Apple dropped, going flat. AVGO dropped, going flat. Coin dropped, popped, dropped. CoreWeave kind of popping actually. Robinhood dropped and now bleeding off. Microsoft dropped and going flat. MicroStrategy doing nothing. Meta dropped and popped and going flat. Netflix popped and going flat. NVIDIA popped and going flat. Oracle popping. Palantir dropping. Tesla dropping and actually now dropping a bit worse. Mag 7 dropped, it popped, and now it seems to be dropping again. The S&P 500 pretty much dropping all day, at least for the first hour. At least for the first hour. And where are we here? All right, we are not, see how we bounced here at 1021. We cracked it on the second try. Your next support is at 20, which is not only basically the low from yesterday, but it is also the put credit spread. And then there's another put credit spread now just below it that just got created. So you have two downside put credit spreads to pay attention to, 6720, 6710. 6720, 6710 levels you should be paying attention to. And hey, maybe you don't believe in levels or other players, and then I guess that's on you. I see what you're saying. I'm usually done within the first 3 hours though, because volatility definitely dies off, but 10 points on a multiple accounts on different platforms definitely adds up. I'm not disagreeing with that. But once again, there's some low volatility days that 10 points is way too big of a reach. And then there's high volatility days where as likely as you are to get 10 points, well, you could probably have gotten 20 because the vol is that much higher. So you're saying something that I haven't disagreed with. If you're trading multiple accounts, always getting 10 points, of course, that adds up. I haven't disagreed with that whatsoever. But there's no good trader out there who would argue that, like, okay, that's what you do. Like, you're just apparently always looking for the exact same target all the time. Like, there's no consistently profitable quant trader who would say that's the best way to approach the market. I'm not saying that those systems aren't profitable. I'm saying they're not optimal. And those are two very different things. You could easily create a strategy on NQ that goes for 1 point every day, and you're going to make money because going for 1 point is really easy, and you're going to have a hit rate of 99.9%. And if you're trading it on 20 accounts here, 10 accounts there, yeah, it's going to scale up. If you make whatever 20 points, but you're doing it on 50 accounts, congrats, you're making $1,000 a day over the course of a year, a trading year. That's 250 grand. That's real money. It adds up. I'm not disagreeing with that. I'm just saying it's not optimal whatsoever. Not optimal, not optimal. So, but that's also up to you. Maybe you're just comfortable with it and you don't want to be an optimal trader. Like, maybe your point isn't to optimize your strategy. Okay, cool. If you're just happy with it, you're happy with it. It takes all kinds of traders to make this market function. So don't let me get in the way. I'm just letting you know, like, exclusively through the lens of math, you are not playing it optimally. But maybe that's not your goal. Maybe you just love your 10 points and you don't feel like doing other stuff. That's cool too. Wondering if that position is there. We could double check. No, they pulled it. What? They literally just pulled it at 1031. There's a little bit of a leftover position there, but this leftover position is 1/10 of the size. And they moved it down to 200. But you could see they kind of split it up here. Like, they dropped it from 35 down to 10, and then it actually would have gotten a fill right now, roughly. But 10. Yeah, the leftover size is about 1/10 of the size, 1/8 of the size. This is only 100 contracts, where before it was 800. So it looks like they just pulled it without getting a fill, which that happens. Just because you put an order on doesn't mean you have to get a fill. And you're not legally forced to keep it on or anything like that. I'm very surprised. Wait, when did this get filled? Huh? I'm surprised it didn't go short somewhere in here. Never mind. Wait, no. Go from never minding back to minding, because that doesn't fucking make sense. How did I really thought it was either going to short here, this pop and that short, or here, this pop and that short. I swear. Or even this one, this pop and this short. I'm going to have to review that, because I really think it should have either gone short either here A, here B, or here C. Right into the pop. Like this green bar, this green bar, this green bar. Why? Is it on? It is on. Yeah, they're all enabled. Should I... disable. All right. I just turned them off and turned them back on just in case it needs a little bit of a jolt. I'm just surprised. I'm a little surprised. But hey, that's life, folks. What's life without being a little bit surprised? What's life? All right, very quickly, if you haven't already, if you want an Apex account, 80% off, and right now the upgrade from eval to PA, the lifetime fee is only $85. It is dirt cheap. This is the best upgrade fee they ever offer. Use that code Goonie on Apex. Remember, on Apex, it's a 1-day pass, but to get a payout, you have to trade for at least 8 days. On the flip side, you could use the code Goonie for 40% off and no activation fee on Take Profit, and it takes 5 days at minimum to pass the test, but then you could get a payout every single day. That's why I use both these accounts, is because I could pass these tests really fast, but then I have to wait to get a payout. On these ones, I have to wait to pass the test, but as soon as I do, I could then get a payout. So basically, the way I do it is the days I'm not getting payouts on Apex, I'll take the payouts from Take Profit Trader. And then as I'm waiting to pass these tests, well, I could pass these tests in 1 day. So basically, I play them off of each other and just take advantage of both pros. And I think that's the best way to engage. And that is literally exactly why I have my Apex accounts and my Take Profit accounts. Basically just taking advantage of the pros of both. But regardless, that code Goonie, the same code GOONIE, will work on both. And whatever the deal is, you're going to get the best deal when using that code. And also, just so you know, financially, to go from the start to a performance account, like a funded trading account, roughly these two at the moment are roughly the same. Just so you know, like one isn't like way better
Order
or way
submitted.
oh, what the fuck? One isn't way better or way worse. All right, I like Icarus on this one. So the other one I had a little bit of issues with, but this one I like that Icarus is front running the 200. That's going to be a big technical level, a big psychological level. I like that Icarus is saying, you know what? We're going to take the trade. We see a lot of weakness in momentum, but more than happy to lock in the profit before a potential bounce. Obviously, it might bounce even before that, which would be a little bit of a bummer, but I like the idea. I don't mind this trade at all. The last trade, I had some issues with, obviously, but this one, I do not mind. I do not mind. Actually, if it were me, I would be putting it in at 201. Icarus is trying to get out at 204. What are we doing, Icarus? What are we doing, Icarus? Oh, no, a tick away. Icarus, no. No, shit. Icarus, we're not playing these games today. We're not in a ha-ha, fuck around type of mood today. Don't do it to me. No fucking way, dude. No way are we dealing with this again. One goddamn tick. No way did it get one tick. My fill was at 203.75. It hit 204. One tick. Come on. Don't do this to me. There we
Target
go.
bill.
There we go. There we go. That could have been brutal for a second there. Not gonna lie, folks, that could have taken some turns. I all of a sudden started having just a flash of all the times that I was one tick away. Time to rename the bot Tickerus. I kind of like that one. Tickerus. I like it. I do like that. Empty room clap, you know? That's the best way to liven a room up. Pickle me timbers. The real question here. Yo, what time is it? Yo, Icarus is actually, now that it's past 10:30, Icarus is allowed to trade a lot. I'm looking at the times that Icarus is allowed to trade on Thursdays, and it's allowed to trade quite a bit all the way up for the next hour. Because the momentum to the downside is so strong, it allowed, like, basically it's a measure. The way Icarus part of it works is a measure of momentum. The stronger the momentum is, regardless of bullish or bearish, it's allowed to trade more, because the thought is that momentum begets more momentum. And if there's a lack of momentum, generally you're just kind of stuck then. So the fact that we've clearly had momentum, and it happens to be downside momentum today, it's allowed to trade. Like it's definitely, it's not at the max amount of trades it's allowed to take, but it's at a high count. So I wouldn't be surprised if this keeps popping off. However, if the momentum shifts from bearish to bullish momentum, there will be a pause period until it shows better strength. It wants a high reading of negative or positive momentum. It doesn't care which one. It just needs one of those, and it'll trade more and more and more. And it's like a sliding scale. It's kind of a gradient. So right now, there's been a lot of bearish momentum, and that's why it's taken 3 trades to the downside. If we start to pop, well, that's going to bring the momentum reading back to 0. But then if it keeps popping, it might go positive, and then it could take some positive trades. However, if it fails here and keeps going down, that'll just add to the negative momentum, and it'll just keep shorting and shorting and shorting. Can your program on Spot Gamma can the program Icarus use Spot Gamma data? No, because I don't think there's a way to import hero data on Spot Gamma into NinjaTrader at this moment in time. I'm not saying it's impossible. I bet if you're really good at coding and exporting data and importing, like, I'm sure there is a technical workaround that, like, you could pull it off, but it would be a heavy lift for sure. Up there with Matt or down there with Matt, to be decided, but he's definitely on his own level. Pickle, that's the sound of all the other traders that are on Matt's level. You can hear an echo. Matt, so just out of curiosity, what is the lowest amount of points you've gone for based on ATR on a trade, J, and what is the largest? Oh, I mean, there's some times where it's so bad that I've gone for 0 just to try to get out for break even. There's other times, especially in April when vol was high, that there was like literally 100-point plus targets on an intraday basis. So basically the full gambit. I mean, there are times where it's been so messed up and my position's so bad that it readjusts and it says, dude, if I could get out for break even, give me 0. I'm happy to get out for break even. And then, like I said, when vol gets crazy, I remember one time specifically, it had to be mid-April. One day that, like, I can recall the largest it ever went to was like 118 points, not ticks, points. 118 points was the target. But honestly, there might have been ones larger than that I'm just not remembering at this moment. Because for me, it's just based in units of ATR. I'm going for X amount of units of ATR in terms of reward, and I'm risking X amount of units of ATR to the downside risk. So, like, I've scaled ATR. I'm like, oh, am I playing with 1 unit? Am I playing with 2, 3, 4, 5, something like that? So in my mind, I better remember the units based on ATR, not just points. That one jumps out to me because I remember it almost hit 118 and I manually put in a stop at 100, and then I got mad because my stop got hit, and then it went for that target anyway. So had I just let the system do the system thing, it would have been fine. And granted, I still made 100 points, which on an NQ contract is $2,000, so I'm not crying about that. But it just stands out to me because I remember I intervened and it ended up worse off. Is it better to change size or SL target range? So the SL target range is going to impact your expected value equation, as in how often are you right, multiplied by your average win size, and then you take away how often you're wrong, multiplied by your average loss size. So your SL target, that changes your expected value equation, and then your size is just literally going to scale the nominal values. So they're not in contrast with each other. They're two different parts of a system that you have to consider for the system itself. The flow, hopefully turning around. Maybe we bottomed right there at 1045. Maybe we bottomed right there at 1045. So who knows? This might have, honestly, if you ask me right now, folks, if you don't know this, if you're new, I am like a finance fucking nerd in the world of quants and stats and all that stuff. This should jump out to everyone from 9:45 to 10:45. Exactly 1 hour, the market got hit. If you ask me, there's someone out there or a group of people out there, a large fund, who had to do a giant amount of repositioning and they coded their bot to do it out over an hour. When you see perfect, oh, it ran for 10 minutes, it ran for 15 minutes, it ran for an hour, it ran for half an hour, it should jump out to everyone that from 9:45 to 10:45, we dipped. I don't know this for sure. You'd have to go ask every single quant firm in the world, but I wouldn't be surprised if there was a quant firm that had to do some sort of repositioning. I don't know, bullish or bearish, unloading, rolling. I don't know what they were doing, but the net impact in the short term was down. And even right here, that was 20 minutes. Like a lot of these things, the timing of it is so perfect that it feels like it was literally just a time code that someone wrote in of like, do this over the course of an hour, do this over the course of 20 minutes, do this over the course of 30 minutes. To me, those are slight signatures I see of like, oh, that was just a program that someone had to run to rebalance. Now, were they rebalancing to be bullish or bearish or whatever? I don't know. The jury's out on that. But when I see like perfect times, it makes the most sense to me. And right here, I don't have the exact proof of it, but like I think we're kind of just doing a logical litmus test here that when it ran exactly for an hour, it was probably someone coding in to reposition over the course of an hour. Would you consider it safer to scale more size with smaller or more room with less size? No, neither are safer because they're two opposite things. So the safest thing is to always scale down. That's your safest thing. And then as you are working on your strategy on a small size, that's when you try to figure out the optimal combination of profit target and stop loss. And then when you're confident with it, that's when you size up. So size is what's going to kill you. And you need to keep minimal size as you're working out what the strategy is, i.e. the profit target and the stop loss. And when you get happy with that and you know you have positive expected value, that's when you could size up. But don't think of those two things at odds with each other. Think about them as two different aspects of your overall trading system, and you need to be cognizant of both. Did you end up trailing that 100-point trade? If so, how much? I didn't, because that wasn't the system. I'm not against trailing. I know what that system was, and that system didn't have a trail. That was actually the runner. That was the runner. 5 minute, 10 minute, 30 minute, all bearish. 5 minute, 10 minute, 30 minute, all bearish. But the 4 hour on both is still bullish. I'm hoping that we found the bottom and we just rocket off of this. weird level to bounce off of. We bounced off of 25. We did break the transitional support, but we didn't tap the put credit spread of Iron Condor. And look at that. We got absorbed right back up to the bottom of the transition zone. It easily could get rejected here. Obviously, I don't want that to happen. I have a lot of bullish positions on. I would rather this skyrocket, just being honest. But also, I wouldn't be doing my job if I didn't let you know support commonly turns into resistance. I would prefer that, like a black hole, the gravity of this transitional zone absorbs price back up, and then we could battle it out at 50. But no one should be surprised if we get rejected here. That's when I say don't predict, this is exactly what I'm talking about. You should say, okay, 35 was important. We found support, it cratered. We know it's the bottom of the transitional zone. We know this has an actual like measurable impact on how market makers interact with the market. So here, does it bounce? Does it get sucked back up in here? Does it get rejected? I don't know. And I'm not trying to predict it. I just know it's a key level, so I pay attention to it, and I'll be watching. Is this a higher low that we pop off of, or is this a lower high and we just get cracked? All I can tell you is we have to watch. I know that there's many content creators, streamers out there, and they're telling you, no, we got to bounce. We got to do this, that, or the other thing. They're full of shit, folks. Like this particular world of financial trading, influencing, streaming, it's such a world of scumbag liars who don't know what they're talking about, and they just can't be honest and tell you that on day trading, it's 50-50 opportunities. I caught the last bottom tick. Lotto play next. Albert, I hope you crush it. I hope you make a shitload of money. Ride the trend. If you catch it all the way back up, put your stop at break even. It's a free lotto ticket play. But anyway, coming back to my diatribe on how everyone in this world is a bunch of scumbag liars. They are that. That is the title of this particular sermon. In the world of content creation, when it comes to active trading, most, not all, but most are scumbag liars. The shorter the time frame, the more statistically likely it is it's a 50-50 opportunity. The shorter your time frame, you get into the world of playing 50-50. You at first might be like, okay, well, 50-50, how do I make money? Yeah, you can make a lot of money at 50-50. A lot of money. You just have to be really good at risk management, and when you're right, you'll let it ride. Or on the flip side, you have such a small profit target and you have such a large risk that your hit rate becomes so high that by the time you take the bad beat, you can take that, you can absorb that in your buffer. So there's two ways to do it, but those are the two ways to do it. When you are day trading, you have 50-50 opportunities. Option one is keep your risks tight. It runs in your direction, move your stop to break even, hope you caught the runner. Option two is have large risk and small reward, hoping that you hit your reward so often that you just avoid the bad beats enough that by the time, and it will come, by the time you hit the bad beat, you already have so many small winners that it pays off that small loser. Both work. Both work. Martingale strategy works until it doesn't. Theoretically, with unlimited money, the martingale will be net positive by one base unit. I remember that was part of one of my stats classes. We had to do like a theoretical analysis of martingale. And in the theoretical event that you have unlimited money, which is obviously not true because we all have limited money, you will be net ahead by one base unit at the end of martingale. That is where the results will converge to. But it's not realistic because we don't have unlimited money, which is inherently what is flawed about this, the Iron Condor strategy that you hear from that Discord. The Iron Condor right here, that is 20,000. How big is it? It's 20,000 contracts, right? Why do I not see the side? Do I have to go over here? Right here? Okay, 17.5 and 21. That's what's flawed about this martingale strategy for the Iron Condor, is it does work in the long run if you have unlimited money. Obviously, no one has unlimited money, which is why in the long run, martingale doesn't work in reality, but it does work in theory. Table limit, that's a quicker way of how casinos can ensure you are not martingaling, is they put on table limits. Come on, man. Why can't I have unlimited money? Well, honestly, the way the government has been printing US dollars, you might be close to having unlimited money. Do not forget that on a TP, you need to first fill the buffer before you can use the daily withdrawal. You're talking about the SIMDA funded firms. Yeah, you have to fill the buffer before you can request these payouts. That is true. Oracle's looking great. NVIDIA's bouncing back. SOFI's in the green. AVGO's in the green. CoreWeave is in the green. Tesla makes me want to put my nut sack in a press and see what happens. Microsoft's doing nothing. Apple's not looking good. Hood is bouncing a little bit. Oracle's looking great. Upside gap fill on Oracle to 300 and change. 300.03. On the daily chart, you can see the evident gap right there. It's at 303, which is about $2.50 more to go on Oracle. I would love for it to pump all the way up to 312, the high from that same day. SoFi, nothing on the daily chart right now. NVIDIA, new all-time high. There is a downside gap fill, but that is a new record high. SoFi, AVGO, looking for that breakout at 347.61. CoreWeave looks like it put in a higher low. I wouldn't be surprised about 144, followed by 149. AMD, new all-time high. Palantir consolidating. Tesla getting walked down. I'm really praying it doesn't break this low from Friday. Microsoft also getting walked down. Apple breaking some of these recent lows. I'm looking for the reversal back above 258. Hood is consolidating. Coin, higher low, looking pretty strong. Hut, looking good. Oklo, looking good. Meta, trying to rebound. Maybe a dip buy opportunity. Netflix, strong bounce from 133 to 228. Jesus. Rum, trying to hold $8. Open, looking weak. Looks like it put in a lower high. Rigetti, another giant wick up. Qubits, another big wick up. IONQ, consolidating. MSTR looks like shit. Ripple, not holding $3. Solana, 222. Texas Roadhouse, grinding up. Bonds are going flat. Oil, trying to hold on the low 60s. Gold, almost at an all-time high, taking a bit of a breather. Vol, slightly elevated. ETH, 4.3. Bitcoin looking a little bit weak in the short term, but overall, obviously, that is very strong. But trading at like 121, not really following through here. Wow, what a day. Okay, do you guys have any more questions on like systematic trading or Apex or take profit trader? After that, we could talk a little bit about options flow and whatnot, but it seems like we're having some really, really good discussion about proper ways to like systematically approach the market, which obviously I've been using on my SIMDA funded one. So do you have any questions on take profit trader? Do you have any questions on Apex, or do you have any questions on the general sense of mechanical trading, systematic trading, algorithmic trading? As your questions are coming in, remember, there's a lot of people in the Discord talking about this stuff daily, people working on systems together, people working on their own systems. And a lot of the people, not all of them, started where most people are at. No coding background, no knowledge of coding. They started off at square one with the rest of everyone else. And from there, they're actually running their own strategies right now. So if you think you want like a more in-depth community, that's exactly what the Discord is for. Beyond some swing trading, there's people who sell premium, swing trades, future trades, crypto trades. People just play Minecraft sometimes all day in there. We have a fantasy league, which I'm getting my ass kicked in. Generally, we debate super racist topics to figure out which is more racist. Just yesterday, we solved the two-state solution between Israel and Palestine. Granted, we didn't tell the rest of the world about it, but we literally solved the problem. And then we just moved on to the next thing. So sometimes we attack like the biggest issues of the day. Can you teach your bot to talk to Wall Street bots to know when it's buying and selling? I doubt it. Maybe if you're a hacker out there, because that would involve accessing someone else's data. So I bet if you were a hacker and far better at coding than I am, you could theoretically pull it off, but no, I can't do it. If you can put a stop loss or take profit realistically that has a lower take profit than a stop loss, what do you think it should be? Like 25 stop loss, 12.5 giving market volatility? Well, first of all, I would never use a number like that. I would use it in units of ATR. But once again, those numbers only matter if you have the concept of how often are you right and how often are you wrong. when you're talking about trading in general, and more specifically systematic trading, knowing your hit rate and your miss rate is not enough. And even that, knowing when you're right, how often you make or how much you make or how much you lose, that itself isn't enough. You need them both together. That is the equation. So right here, you're asking about a 25 stop loss and a 12.5 profit target. I don't know. How often do you hit the 25-point stop loss? How often do you hit the 12.5 take profit? I would need another piece of data. And you see the opposite all the time on social media. You see people bragging about, dude, I'm right 95% of the time. It's like, okay, cool. Does that mean you're net profitable? I don't know. I'm going to shrug my shoulders because I need to know how much you make when you are right, and I need to know how much you lose when you are wrong. It is possible to be right 99% of the time and still be a net loser. It is possible to be right 1% of the time and be a net winner. Obviously, those would be rare examples, but yes, they are possible. Here's a look at Mag 7, bouncing ever since 1045. Here's a look at the S&P 500. I deeply believe there was a 1 hour program that just finished doing what it needs to do, and now the market's seeing relief, and it just so happens to come pretty much at our key levels. We are getting absorbed back into the transition zone. From a technical perspective, intraday, you'd want to see this crack of 46, but most importantly, you would want to see 50. And just so you know, there is a gap right here, an intraday gap, which just happens to do some announcement between 951 and 952. I said announcement, but it's not. It was a big block order that just made a weird gap. So yes, markets like to fill those gaps. There is a gap in the chart right now. It is evident. Between 951 and 952, you can see that gap, unless my data shit out. If this is a data issue, please forget what I'm saying. But not only do we see this big technical level at 50, psychological level, and gamma level, it's now also a gap. That would be a very evident target today, folks. A very evident target. For example, lost 6 trades with a stop loss and make 21. Once again, how often are you right? Oscar, you're overcomplicating it. You are overcomplicating it. There's one equation. The only equation that matters in the world of trading is called expected value. Can you guys see this? Expected value. Where is the cursor? Oh, here it is. It is your hit rate, percentage of time you have the winning trade. Hit rate multiplied by your average win size. Like, do you win $100? Do you win $1,000? And then you take away your miss rate, how often you are wrong, percentage of the time, and it's your average loss. That's it. That's the equation. That needs to be positive for you to be a profitable trader. You need positive expected value. If you have negative expected value, you're going to lose given enough data, given enough trades. It is your hit rate, percentage of time you are right, multiplied by your average win size, and then you take away your miss rate, the percentage of time you're wrong, by your average loss size. That's it. This is the only equation. Well, of course, there's other ones that matter, but this is the most important equation for you as a trader. Do you have positive expected value or not? If you do not, you will not be a profitable trader. If you have negative expected value, you are definitely going to lose money because given enough trades, eventually math is going to math out and you're going to lose. This is the most important equation you need in the world of trading. There are other ones, profit factor, Sharpe ratio, blah, 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 this, that, the other thing. But the most important question of just knowing, are you going to make money or not, is expected value. Matt, pretending to be Adam in the money. Who the fuck is Adam in the money? I'm pretending to be a person. Adam, is that a person? Is that a community? Is that... I don't know who that is or what that is. Is it a thing? Is it a song? Is it a metric? Is it a book? Is it a chapter in the Bible? With the whiteboard? Oh, I didn't know that there was only one person on all of the internet who uses a whiteboard or paint to describe things. So I forgot that was a individual. It's a person. Yeah, I forgot that person probably is the only one in this entire world who's allowed to use Paint. Microsoft, like Bill Gates personally calls him and he's like, you are the only one. You are the only one allowed to use this program. It's a specialty deal with Bill Gates and Microsoft. Adam in the Money, verse 434. There should be a degen trading Bible. And on the seventh day, the Lord said, let there be 0 DTEs. What are the links to your AI bot programming? I don't sell my bots. Maybe in the future I will consider it. But right now, the main thing I do related to bots, at least, is help other people in the Discord like build out their bots, and like we just discussed, like good habits, bad habits, good features, bad features. Sometimes we're just spitballing, but there's no website where you could just like click and buy my bots. I don't know, maybe in the future I'll do something like that, but I just right now don't really have an interest in that. I just have an interest in building more bots for myself and diving into it. Oh, Oracle looking good. NVIDIA looking good. AVGO was looking good for a second there. Fucking dude, Tesla will just not give me a break. Oracle, probably not a bad time to check that position in all reality. I'm afraid to check my NDX position today because it cannot be looking good. What's up with Tilray? That's just that cannabis play. I don't think I really have an edge there because it's just based on politics. Fundamentally, it's a failing company because the political regime is currently so against it that it's just burning money. Maybe things can turn around when it gets more of the political green lights, but what's my edge there? I don't know when politics are going to get their head out of the ass and like legalize it across the board and allow these companies to do what they want to do. I mean, there's a chance that they do, but what if they do it the day after that company declares bankruptcy? Like that one to me isn't a technical bet. It's not a fundamental bet. It's a political bet, and I have no edge when it comes to I have no edge to that. Does Apex still have the ADPA? Yeah, that's the current deal. And you could take advantage of it if you use that code Goonie. So it's 80% off and a cheap lifetime fee for the upgrade from eval to performance. And then also Take Profit's running a pretty sick deal too of no activation fee. So by the time you do all the math on these two, they're pretty comparable, and that's why I use those two. There are slight nuances between the two firms, Apex and Take Profit Trader. So make sure you quickly understand how the payouts work. And like, for example, Apex has a 1-day pass rule, while on Take Profit, you have to trade for at least 5 days. But on Take Profit, you could get a payout on your funded account on day 1. On Apex, you have to wait 8 days. So there's like little nuances that maybe some are better suited for your personality and mindset, but I like to use both because then I just take advantage of the pros of both. Tierly distant earnings today, but needed to is federally first. Well, the issue is they're just burning cash. So like, once again, they don't have an unlimited amount of cash. So it's kind of, how will their cash reserves, the cash reserves are on a clock and the clock is ticking. So basically, will they be able to survive as a business by the time they get the political updates that they need? And I don't have a prediction on that. I don't want them to fail. I'm not rooting that they do. But that's just same thing. Like when people ask me about like pharma stocks and biotech, I just don't know anything about that world. And it seems like a lot of these companies end up not doing well because it's very difficult to get a drug approved in the US, excluding the COVID vaccine. So to be able to discern which ones have a shot and which ones don't, that takes like a special set of knowledge that I just don't know about. I'm much more informed in like tech sector things, but remember, the stock market isn't something that pays you for breadth of knowledge. The stock market is something that pays you for expertise in a specific thing. There are certain people who day in and day out, they sell S&P 500 premium. That's their thing. They don't do anything else. They get really good at it. There are other people who play the tech sector. There are other people who play biotech. There are people who day trade, scalp trade, swing trade, invest, arbitrage. Remember, the market is a thing that pays you for expertise. It does not pay you for a breadth of knowledge. If you know a little bit about gold and a little bit about oil and a little bit about scalp trading, whatever, you're going to lose a lot of bit of money on all of them. If you have a little bit of knowledge somewhere, great, whatever, keep learning. But to really make money, you have to have expert knowledge in at least one aspect of it. Biotech is a crapshoot. It's a crapshoot for people like me who don't know what the studies mean and who has a better likelihood, but it is not a crapshoot for people who know a lot about that world because they're able to discern those types of things. And my proof to that would be that there are many hedge funds in existence that make millions, if not billions of dollars per year buying the right biotech companies because they have that intimate knowledge of the space. I don't. You got to know where like your knowledge ends and where someone else's starts, and that's just not mine. Not mine. So Mag 7 vomited, popped, flat, puked again, trying to recover, seemingly going flat right now. Same thing with the S&P 500. Flat, puke, pop, flat again. So right now from 11 to this moment, we've just been flat. I'm waiting for the 5-minute and the 10-minute to get back on top of the EMA cloud on both ES and NQ. So I basically want NQ to recapture 25,300 and I want ES to recapture, we'll just call it 6,800. So I'm looking for the recapture on those two. You got to know when to G. I don't know what that means, but I like the sound of it. Well, folks, I'm very hopeful and optimistic for a full day recovery here. Maybe I'm being an optimistic Oscar. I don't know. Maybe you're being a pessimistic Pete. Maybe I'm biased. Maybe I'm right. Maybe I'm wrong. I have no fucking clue. But that's not really unique or specific. In all reality, I don't know what the fuck's going on in anything. I don't know what I'm doing with my life. I don't know what I'm having for dinner tonight. I just found out that apparently I have to go do like a family thing with my wife this weekend. That was news to me. So please, by the fact that I don't know what's going on in the market today, that's not unique. That is not special. I don't know a lot of things. The only thing that I'm like fucking sure of is I'm going to crush the stair stepper today and I'm going to catch shrimp on old school RuneScape. Beyond that, beyond catching shrimp on OSRS, beyond hitting the stair stepper, those are the only two things that are sure as fuck. Everything else in this world, I don't know. I don't know about the stock market. I don't know. I just don't know anything. I don't know. So good luck with that. Is Trex back? I don't know. That's all on Trex. He was literally only muted for 30 minutes. So if he doesn't want to come back, that's 100% on him. I'm surprised that he would have such a visceral reaction to a 30-minute mute when I have mods in here. I mods in my Discord that are literally banned from chat. And that guy had a 30-minute mute. So I don't know. It sounds like he just wants to take his toys and go home. But he's not banned. I'm definitively sure he's not banned. He wasn't banned yesterday. He's probably now on a burner account, but that's up to him. It's 100% up to him. Oracle looking great. Tesla showing a little bit of life. NVIDIA showing a little bit of life. SOFI showing a little bit of life. AVGO did pop going flat. Palantir showing a little bit of life. Hood showing a little bit of life. Interesting. Oracle is looking good though. It's currently the biggest gainer on my watch list. Not upset about that. All right, folks. Well, don't forget, if you're signing up with Apex, use the code Goonie. If you're signing up with Take Profit Trader, use the code Goonie. If you're signing up for the Goonie Trading Discord, use that code Goonie, and your first month is free. I'm looking for a full day recovery. but we'll see how things play out. Pay attention to those key levels. Remember, don't predict, try to react. And I beg of you, keep your risk in check, because that's how you're going to survive this marathon, this gauntlet that we call degenerately trading. That's what I have for you right now. We'll be posting an update video later on today, and then we're going to be streaming at 9 a.m. bright and early tomorrow for a little bit of payday Friday type of action. I hope to see you there. And if not, have a beautiful weekend. I'll catch you on Monday. Thanks for all the good vibes. Peace.